Hey everybody, Brian here from quantlabs.net. We are on St. Patty's Day, March 17, 2025. In this video, if you've not seen my prior videos on, uh, on my futures options analysis, you should check them out because what I'm going to show you is how technical analysis and the charts and relying on the indicators of technical analysis or technical indicators are a small portion of real institutional level trading. I'm going to just show you the two charts that you need, or two, call it indicators that are all based upon simple math. The first one I'm going to show you is basically it's an oscillator. It's the same thing as what you'd get with a RSI, relative strength indicator. In this case, it's a percent change oscillator. It's the same concept. So let me show you that chart here. This is gold, okay? And uh, this is just a primitive, static, simple chart. And you can see here gold is boomed up from a 10% swing. I don't know if that's, but you can see the big move there. So this can tell you, like an RSI, how everything's been flat, and then all of a sudden some kind of news event shocked it, and just big move into the price. So that says something right there. So that's just one indicator you need. The other one is a simple one as well. So we are in Linux right now, just so you know. So it's limited on what you're going to get. So this one, I believe, is gold as well. And actually, it might not be gold. I think it might be. I can't remember. Anyway, it doesn't matter. But here, as I said, whatever I show you the results, what I want to impress you with is the results. The mechanics are the same across the board in all futures, future commodities, finance, all that stuff. It's the same mechanics in the futures and options space. So it doesn't really matter. So right here for this, you can see the price moves. And then we have a 5-day lagging indicator, 5-day. So you know when this starts to break after 5 days, it will um, indicate that, yeah, there's a breakdown. So this again is your simple moving average. And that's really all you really need when it comes to technical analysis. I think anybody out there, and there's probably a very high percentage of you, just want to uh, rely on technical analysis for your trading. It works fine when you have a positive momentum, but once the markets start to break down, which they have lately, everyone panics because now all their indicators that they use no longer work. So that's why professionals will use these two technical analysis indicators, you could say, just for timing positions, and just use one of many tools as I've shown already. And there's many more to show you specifically now when it comes to options. And as I've shown in the last recent ones with arbitrage and hedging, just to show you the predictability you can get with it and be able to forecast with more certainty because you have the data and the tools to work with. So I want to show you that technical analysis is not, it's kind of important, but it's nowhere close to the other data sets and technical indicators I'm showing, or other methods that and tools you could use to measure when it comes to options and futures trading. If you are only using technical analysis, I think you're going to be, over time, uh, you'll be disappointed, especially in the retail world. The only ones that make money are real traders that are not on YouTube, that are doing fine on the technical analysis. There are those on YouTube and social media selling you product, and then there are those that want to get involved and just get creamed because they don't really understand the fundamentals of how the markets work when it comes to options and futures and the like. But other than that, I'm going to leave it at that. As I said, if you want to know more about what I do, just visit my website, quantlabsnet.com, and go to learn more. I'll put the link at the bottom, and I'll show you if you are interested in technical. C++ and for high frequency trading shops because we are trying to trade just like the HFT shops out there. Thanks for watching.